Hey everyone, Andy Moss here with tradingadventures.com and your look at the weekly charts for this week ending Friday, August the 21st. We're winding into the end of the summer weeks and months here, and over the last few episodes we've watched the price action develop from a bit of a washout, a reversal, confirmation of that hammer reversal, some continuation, and this week we're seeing kind of our first test of the recent uptrend. So let's dig right into the charts. We'll look at multiple time frames here, but most of the focus, of course, will be on the bigger picture weekly charts. We'll tune in to the action and see what the message of the market is telling us. And we'll start first at the small end of the time frame and looking at what I call the roadmap chart. This is the 1 hour view of the stock index futures, and what we're seeing here is the change in character that we've been experiencing for the last week or so. Lower lows and lower highs below declining 5-day moving averages across the board here on the S&P futures, on the NASDAQ futures, the Russell, and the Dow coming up strongly here towards the end of Friday and actually testing that declining 5-day here. That is the blue line on each of those charts. And so that's just a short-term or up-close view of the bit of digestion and the first bit of a test we've seen here in the last couple of weeks. Looking over at the weekly charts, the last few days have felt a little tough with pretty persistent selling, but the big picture shows us that we're really just down to the rising 4-week moving average, or the 20-day moving average there. We're still above this anchored VWAP from the lows, well above a 10-week or 50-day moving average, and holding the breakout here just fine. Over on the Qs, we've got those two moving averages coming together, providing support here at the end of the week, and we're still above that VWAP off of the July 27th weekly hammer low there. So just a bit of a digestion here. Remains to be seen if we go out and make new highs, and of course we still have this extension level, the 2.618 extension up here at 771 roughly on the Qs to watch. DIA, pretty tight ranges here on the real bodies of these last two weekly candles. We're still within the range of this breakout candle, still holding the moving average and the VWAPs there, so doing very much the same. So all of the major indices, index ETFs are above all the moving averages. So this is just a slight rest in an overall uptrend and nothing to be concerned about at this point. The real kicker this week and the real story is Bitcoin. Look at this weekly candle on Bitcoin. We've been watching this consolidation and this 65,500 level down here for many, many weeks. I have mentioned it more times than I can count. And the message was always clear. If Bitcoin can get and stay above this level, then something has changed. And change it did, and it changed very quickly. If we look to the daily chart for just a second, you can see once it ignited, it never looked back. All the way up, and it's a little off the lows here at Friday afternoon. But the interesting thing is, look where it's finding some potential resistance. It's right at the VWAP anchored to the all-time highs. So 78,768 is a very interesting level on Bitcoin. We'll just go ahead and drag over a little highlight here, put our circle right over at the top of this candle, because that is the level to watch here. If I can get this drawn in there correctly, get that one out. 78,770, call it for round numbers. That's the level that we really want to see, or the next level we want to see Bitcoin be able to get and stay above. We could even drag over this this shaded area here was a bit of a reference point from the low back in November of 25. And so we've got a confluence of factors coming together there. But for now, the story remains it's above all the moving averages and testing this key level here. That is the level to beat now for Bitcoin. Meanwhile, dollar failed breakout here. It tried for several weeks to stay above this shaded area, and now it's back below. So more chop for the dollar. Not a whole lot to be surprised about or excited about there, and it's going down. Volatility also staying very quiet. And looking around the rest of the world, ACWX, that's a new weekly closing high. It as well is above all the moving averages and the VWAP off of this recent low. China holding this level well after a strong reversal and getting back over this 3480, 3486. Let's see, that's 3486 there. It's holding that pretty well and looks like it may be consolidating for potentially another breakout move, possibly back up into this area or beyond. It does have a declining 40-week moving average here to be mindful of, and it could go either way, but so far the action looks construction. Bonds, however, continue to have some people concerned. There's some comments this week, some actions by the Fed, some things that got people shaken up a little bit. I won't even try to assess the implications of the macroeconomics of the whole situation, but bond prices continue to go down, which means yields are holding this breakout very well now for 4 weeks. Here's the breakout move, consolidation up to new highs. This high closed the week at 528, and this week we close at 533. So that's the major concern, is that higher yields could stress certain areas of the markets and the economy. Meanwhile, high yield bonds doing nothing here, right sandwiched by the 4 and 10 week moving averages. Oil holding up pretty well, but back above the moving averages, but still just in this choppy, messy range. Gold continues to add to its gains after holding this support level, which we watched very closely for several weeks. Once it moved up higher above that shorter term moving average, it got a breakout, and now it has progressed on beyond the 40-week and the VWAP from the all-time high there. So gold is holding up well, and silver is trying to follow along there. So before we jump into the breadth and participation and relative strength measures, let's go back up here to the SPX for a minute and note that this chart looks fine, right? It's above all the moving averages, it's above the breakout, it's above the recent VWAP, or the VWAP from the recent lows. And the roadmap, the shorter term chart, is showing us that there's been a character change. And it's important to note that weakness is not the same thing as damage. This is what helps us stay tactical. This is what helps us position for entries, raising stops, trimming positions, that kind of thing, both on the indices, the index ETFs, and of course individual positions. That's what the multiple time frames, the shorter time frames are for. And so we've had some weakness here, but it doesn't mean that the big picture has been damaged. The weekly charts on the stock index ETFs are still holding up very well. And so that's a key distinction. The question from here is, does this remain an orderly retest, or does it develop into more significant or actual structural damage in the price action? So far, that's not the case. So that's something to watch there on the stock indices overall. Moving into some relative strength, growth versus value, still consolidating and chopping around off this reversal, finding a little resistance here as expected, or where expected. This was a reversal back in March, and a little bit of support here, and then now possibly a little bit of resistance. So no surprise there as that relationship continues to jostle back and forth. Consumer discretionary versus consumer staples, same thing, just trying to move back in favor of discretionary, but not running away. It was a strong reversal here with the overall market a few weeks ago, and now it's just kind of consolidating, similar to the indices. High beta versus low volatility, moving back up, or continuing to move back up, I should say, in the favor of risk on, and a little bit of a negative close here relative to last week, but it's above the moving averages and clearly in an uptrend here on the short term. And moving on to some individual sectors, semiconductors selling this week, but not drastically, still chopping around here. This is, with the exception of this quick sell-off and recovery, we're really in a box here for 6 weeks, 7 weeks now. Flat 10-week moving average, and really trying hard to hold the VWAP off of this low before the breakout, that ham reversal back in May 30. And so no real damage there, just more consolidation. It could continue lower, and if so, we can watch the low of this week near 463, and then the rising 40-week moving average down here around 427, or it could just as easily break higher from here, at which point we'd have eyes set on recent highs. Nvidia does report earnings next week. That will likely have some effect, so a calendar item there to be aware of. Biotech had a really big week, largely on the backs of some news out of Moderna, mRNA, and Merck. Since I mentioned them, let's just go ahead and show you the massive weekly candle here on Moderna. And, you know, of course, the bulk of this move happened in one day. The stock was up, that's 170%, roughly speaking, from the open of this week to the high of the week, and pulled back a little bit there, but not drastically so. And of course, that was beneficial to the biotech sector as a whole. Software, very small real body here on this candle, right in the gray shaded area. Touched briefly the rising 10 4-week moving average and holding up just fine. Mag 7 names, more consolidation similar to the overall indices, not surprising. Financials, a little bit of selling. It got down below, but look at the close is really right on this rising 4-week moving average, and that has been the kind of the baseline for this recent trend. It's climbed this so well. Now we're just starting to see potential signs of that move taking a break. If it does, then we've got this high back from January of this year at 56.51, and then we've got the rising 10-week moving average here to watch if it wants to take a break, but still a very solid, healthy uptrend there in the financials. Energy names making a new weekly closing high this week, and that trend remains up. And then some Mag 7 names individually. Apple tried to get a run and came back closing below the moving averages. So it's still consolidating. As long as it holds this VWAP off the lows, it looks okay for potential setup and a move higher. So not broken yet, but it is below the moving averages, which is notable. Amazon giving back a lot of this move, but once again, it's still up above this extension level. It's between the moving averages, and it's still, most notably, well within the upper half of this big candle of a few weeks ago. So it's still pretty constructive. Google, failed breakout back here, continues to consolidate. It's not going anywhere yet. It does have a trend line, the shorter moving averages, and the VWAP from March 30 overhead. So that continues to be a level that it needs to be able to prove that it can get and stay above. That's right there around 355. Meta, nothing constructive, nothing bullish for Meta happening yet. And it's still constrained by this rate of trend and really testing support here in the 540 to 550 area. Looks vulnerable for more downside there. Microsoft, like the software sector, holding this steeply rising 4-week moving average and digesting this huge move really pretty well so far. Nvidia, as I just said, reports earnings next week, and it's hanging out here not very far from recent highs. Looks constructive, but there is a calendar item to be aware of. And Tesla, even Tesla's showing some improvement the last 3 weeks. It continued that this week and stopped right at the declining 10-week moving average. So it's trying, but still has tests overhead in that moving average, and then the 40 weeks still declining up here right around 400 level. So now let's check on some breadth and participation measures. This, like every week, we take a look at the percentage of stocks, percentage of S&P 500 stocks above a 50 and 200-day moving average. So a little bit of a downtick here this week, sharper in the percentage above a 50-day, but very moderate or mild in the percentage of stocks over a 200-day. So not a lot to be concerned about there. We're at 54 and 70% respectively, so still holding up very well up to this point. And then we'll take a look at the bullish percents. But before we do that, I do want to take a minute and acknowledge this week we got the unfortunate news that Tom Dorsey, one of the founders of Dorsey Wright and Associates, had passed away. So very sad to hear that. This is compounded by the fact that his partner, his founding partner, Watson Wright, just passed away last week. So to lose both of those gentlemen in a matter of a couple of weeks is just very sad to hear. You've heard me talk about it before, learned so much from Tom Dorsey over the years and everyone at Dorsey. I talk about the bullish percent index in every weekly charts episode, and they're the reason why. That's where I learned how to use this. They are the ones that taught or at least taught me, what the bullish percent index was, what it means, and how to use it. And if you go through the Chart School article about point and figure charts, you'll notice here I have a link to their website. They had a whole educational series or curriculum for point and figure charting. And so if you haven't yet, take a moment to look through this, familiarize with the tool, and get to know, because it really was, Tom was a really smart guy, a really fantastic teacher, and a really great motivator too. He was always positive, always forward looking, always had at least one, if not many, good lessons to share. Every time you heard him speak, it was always time well spent. So we'll mourn the passing of both Tom Dorsey and Watson Wright this week, and appreciate all the lessons over the years. So with that, looking at the the bullish percent index here on the S&P 500, a little bit of a reversal here. Still hanging around the 64% level and back in a column of O's. So that puts it on bear alert status. We don't have a sell signal yet, a point and figure sell signal, so it's still bullish. But we are noting the reversal here, which coincides perfectly with the percentage of S&P 500 stocks above a rising 50 and 200-day moving average there. So just a little bit of a dip in the overall participation. If we look at the NASDAQ 100, of course, we're going to see similar action, which is not uncommon after such an astronomical move in one reversal column. And remember, this is something else that's pointed out over the last several weeks, is this tool is especially useful, kind of like RSI or any other oscillating indicator. We pay most attention when it's below 30 or above 70. And when it got up here to 76, that told us that, okay, 76% of NASDAQ 100 stocks are on a point and figure buy signal. So there's not that many more that can achieve a buy signal, because they don't get counted twice. If they're already on a buy signal and continue, it doesn't change the calculation. So it just tells you that, if there's not many more stocks left to go up, then maybe it's time for a little bit of a break. And that's exactly what we're seeing right now. If you pair this data with the NASDAQ chart, you can see how that fits together. So get that chart pulled back up here. And then the last one we look at is the NYSE overall. And you can see it's still hanging around. It didn't go as far in either direction. And so it's still hanging around here right just north of center. And it hasn't reversed into a column of O's yet. So that is just fine. No surprises there. But that's the bullish percent indices for the week. And now we consider, what does all this really tell us? We've got the roadmap, the shorter term look at the stock index futures or the index ETFs, whichever you prefer, lower lows and lower highs below a declining 5-day moving average. So that tells us the character has changed. We've seen some weakness this week, but the larger time frame doesn't really corroborate that message. It's still holding up very well. It's above the moving averages, above the recent anchored VWAP from the lows, and very close to or even at new closing highs. So again, it's important to remember that short-term weakness does not necessarily mean structural damage or technical damage. This is just, at this point, a slight pullback. So what do we want to do from here? As always, we don't have to anticipate the next move. What we need to do is read and listen to the message of the market and adapt to the moves that are already occurring. The short-term trend has deteriorated slightly. So that tells you, be more selective, don't be as aggressive, trim positions into strength, raise your stops up underneath as opportunity and market structure allows. And if support breaks, then that's new evidence. And so we adjust again. If the buyers come back into play, and we start to see a sequence of higher highs and higher lows above a rising 5-day moving average, guess what? More evidence. That's the message of the market. That's what we're trying to stay in tune with. So we just keep listening, following the price action, and position accordingly to what is actually happening. How does the market look right now? And that's the process we follow. Bitcoin gives a good example. We looked at 65,500 for weeks. We didn't have to buy this bottom. We didn't have to get involved in this chop. But if you were quick and paying attention and noted this move. Now, it did go pretty far pretty quickly, but look at the consolidation period. This dates back to June of 26. And so it had a couple of fake outs here, but you had risk management levels underneath. So it was worth, in my opinion, taking a shot on the breakout and trailing stops along the way. So that's why we watch these levels. That's why we stay in tune with the price action and pay attention to the charts. So that's the really big lesson this week. We don't have to predict. Just look at the market, listen to the message of the market, and follow along. So that's it for the weekly charts today. It's Friday afternoon. We're getting them out a bit early, and so everybody can enjoy the weekend as we come to closer to the end of summer here. Labor Day will be here before we know it. And in the meantime, stay selective, respect the short-term weakness, know the levels that matter, and let the price tell us what comes next.